Let's bring in now Charles Schwab's Liz Ann Sonders and Solus Alternative Asset Management's Dan Greenhaus. It's great to have you both with us, Liz Ann. It's welcome to New York. It's good to have you here.
Nice to be here.
This definitely seems to be pretty heavily on the mind of the market. What do you make of the concern here?
Yeah, I mean, these concerns were brewing, probably exacerbated even before the news out of Zions and Western today from the cockroach comment by Jamie Dimon, and some of the weakness in the likes of, the Apollos and KKRs that preceded it. So I think probably the move down in yields represents a bit of a flight to safety. Also budding concerns about whether maybe we're going to get to a point where the expectations bar for earnings, at least certain pockets of earnings, may have gotten set a little bit high. So I think it's a confluence of things.
Dan, is this where there's smoke, there's fire? At least that's how the market is going to react before it has more answers?
I think the market's clearly reacting in that way. But we talked about this last week and the week before that. I don't think this is a fire. I just got back yesterday, last night, from the Deutsche Bank Distress Conference down in Austin, Texas. 1,000 investors across the high yield and distress space. And talking to everybody, listening to the panels, et cetera, I get the feeling that everyone agrees with the position I have, which is, particularly as it relates to First Brands and Tricolor, this is probably idiosyncratic in nature. You made unsecured, high-risk loans to undocumented immigrants during a deportation program, and fraud. And fraud, by definition, is not widespread, at least we hope. So I think this is a case of shoot first and ask questions later, but I really don't think this is emblematic of larger issues, these two issues specifically.
I guess my first comeback on that would be, well, what do you expect them to say at a conference where they're in the business?
No, but these are investors who are presumably on the lookout for the type of fraud that affected First Brands.
The whole problem with this issue to begin with is if you're on the lookout in a dense fog, so you can't really see anything because it's so opaque. The shadow banking system by nature is that way. So what are you looking for if you can't see it to begin with?
Well, so first of all, let's delineate for the viewer. There are two issues here. One is in private credit, which is the Ares of the world, so to speak. And then there's what we described last time as what we call the broadly syndicated loan market, or the BSL market. The investors typically who are at the Deutsche Bank conference or any other conference, or investing in the loan space, as Leslie mentioned, are the ones that would be exposed to First Brands and Tricolor. These were not private credit deals. These were not particularly large issues at Blue Owl, et cetera, et cetera. In the case of the...
but have you seen the way Blue Owl's been trading? Then why is that stock doing what it's doing, along with a lot of these other names?
Yeah, well, first of all, far be it for me to defend Blue Owl. I'm not an analyst in the space. And
you don't have, but you can take it in total with the others.
I would argue
the whole group has been bad.
Without commenting on Blue Owl or Carlyle, the fundamentals specifically, I think it's a case of shooting first and asking questions later. The loans are done on a face-to-face basis. They're not traded around. Presumably the credit quality, the covenants are going to be stricter at a Blue Owl or an Apollo than they're going to be in the BSL market. And so I'm generally on the side of the private equity guys that, on the private credit guys that are arguing this is not an issue for us, at least right now, as far as we know.
Do you worry at all about issues in the shadow banking system that we don't really know about, that we're just sort of looking around? And as Jamie Dimon said, you alluded to it already, there's never just one cockroach. It feels like every day here we're maybe seeing another one, or worried about more coming out from the dark. How do you feel?
Well, I think that's why you want to watch some of the big players that are publicly traded companies, the likes of Apollo and KKR. I think the market often gives you those signals. But to your point, Scott, it's in the shadows, literally and figuratively. So we can only speculate. I think one of the other broader concerns is that there's been so much speculative froth that's developed within the public markets, kind of wild, wild west, with baskets like quantum and drones and non-profitable tech and meme stocks, that when you have that kind of speculative froth, and then you have sort of a bigger picture potential issue, those two can sometimes collide and cause an increase in volatility.
Does that mean that you agree with those who suggest there's a bubble in AI? It's just in certain parts of it and not in all of it?
what concerns me is, and maybe the right comparison to the late 1990s, late 1990s, there was not a lot of there in terms of the denominator of the valuation equation, because most of the hot stocks actually had no earnings and had no prospects for earnings. Not the case this time. A robust denominator in the equation, which makes you wonder whether if there's a bubble, maybe it's just sort of an expectations bubble, where you just get the bar set a bit too high. So I worry about the circular financing. I worry about everything that everybody else is worried about. But I think one of the most interesting things that Warren Buffett said back in the 2001 era was about everybody assumes they're going to leave the ball right.